So, if you've been keeping an eye on the markets, you've probably noticed silver making some, well, pretty shocking moves. But what if I told you the craziest part might still be coming? That's what we're digging into today. We're going to look past all the day-to-day chatter and see what the data is actually telling us about silver's future all the way out to 2030. Okay, let's just jump right in with the number that kicked this whole thing off, $75.14 an ounce. Now, this isn't just another record for silver. No, this is the first time in history it's ever crossed that $75 mark. And a move like that, it's basically the market screaming that something big is going on. Which, of course, brings us to the big questions, right? Why is this happening? I mean, what's really driving this incredible surge? Is this just some flash in the pan, a temporary spike, or is there something more fundamental at play? And, the million-dollar question, where do the predictive models see the price going from here? All right, first things first, let's be crystal clear about just how big a deal this is. When silver smashed through that $75 barrier, it wasn't just setting a personal best. It acted like a spark, triggering a much wider rally. It actually started pulling other precious metals, think gold, platinum, right up with it. That's a huge signal of a major shift across the whole market. But a price surge like this, it doesn't just happen out of nowhere. It's not a vacuum. If we really want to get a handle on where silver might be headed, we've got to look under the hood and see what's fueling the rocket. And let me tell you, there are some seriously powerful forces all converging at the exact same time. So you can basically think of this rally as standing on four key pillars. First up, the expectation of U.S. interest rate cuts, right? When rates are expected to fall, holding cash is, well, it's less attractive. So investors start looking for other places to put their money, like silver. Second, we've got global uncertainty. In chaotic times, people have always flocked to precious metals as a kind of safe haven. It's historic. Third, you've got potential supply shortages. That's simple economics. When demand is high and supply is tight, prices go up. And finally, number four is industrial demand. See, unlike gold, a ton of silver actually gets used up by industries, solar panels, electronics, you name it. That creates this constant underlying demand that just isn't going away. And this is where it gets really interesting because it's not just us saying this. Check out this quote from UBS analyst Giovanni Stonovo. He totally backs up the point about interest rate expectations being a huge driver. But then he adds another really critical piece to the puzzle: low liquidity. What does that mean? Well, it means the market is a bit thin. So even relatively small moves by investors can cause these massive whiplash-inducing price swings that we've been seeing. Okay, so we've covered the why behind the surge. Now for the fun part. Let's get to the what's next. What are the actual data models? The algorithms, what are they predicting for silver in the near future? All right, let's look at the numbers. According to the algorithm from CoinCodex, in just the next week, it's forecasting a potential jump of over 15%. Wild, right? Within a month, that could blow up to over 57%. But then, look at the forecast for the end of 2025. The model seems to think things will cool down quite a bit, predicting a much more modest gain of just under 4%. So it looks like the pattern here is a huge initial explosion, followed by a period where things kind of settle down. Okay, but that's just the short term. Now let's zoom way out. We've seen what the next year or so might look like, but this is where the forecast gets, well, truly dramatic. Let's see what happens when these same models stretch the timeline all the way out to 2030. And wow, this slide really just lays it all out, doesn't it? I mean, look at this. On one side, you have the 2025 forecast, a pretty tame gain of about 3.78%. But on the other side, the 2030 forecast, a mind-blowing potential gain of over 1,200%. We're not talking about simple growth here. That's a complete paradigm shift. It suggests the models are seeing a totally different long-term story for silver. Okay, but let's be real for a second. A number like that, it immediately makes you ask a pretty important question, right? How much can we really trust a forecast that's trying to predict things so many years from now? It's an incredibly exciting number for sure, but we've got to bring this back down to earth a little bit. So here's the reality check. And the source material is very upfront about this. These long-range predictions come with some major asterisks attached. First off, just predicting any market a decade into the future is insanely difficult. Anyone who tells you otherwise is selling something. Second, who knows for sure what silver's role in the global economy will even be that far down the line. And finally, you have the whole variable of supply inflation, how much new silver is being mined. That alone can throw a huge wrench in the works and completely change the price.
And this brings us to the really important part, our standard disclaimer. We have to be super clear about this. Everything we've talked about today, it's all based on publicly available forecasts and analysis, and it's purely for informational purposes. This is absolutely not and should never be taken as financial or investment advice. Please, always do your own homework. So where does that leave us? Well, it's this really fascinating tug of war, isn't it? On one side, you've got these data-driven forecasts pointing to absolutely massive potential, all fueled by some very real, very powerful market trends. But on the other side, you have this simple, undeniable truth that predicting the future is, well, it's impossible. So the real question for anyone watching silver isn't just, will the price go up? It's which of these two powerful forces is going to win out in the end? The data or the uncertainty?